Hi, I'm Mike Capizzola from the Investing Channel, and welcome to IPGo, the show where we take a look at the IPO world, past, present, and future. Equity markets remained subdued last week, though the path of least resistance still appears to be lower as we head into Q3 earnings season. The IPO and new issue markets don't seem to be concerned with wider equity market performance, and as has been the case for most of 2021, there are plenty of companies lining up to list both in the US and farther afield. One of the most anticipated IPOs at the moment is that of coding platform GitLab Incorporated. The company has been able to raise its IPO price to range between $66 and $69 a share, a significant premium to the original indicated range of $55 to $60 a share. If GitLab achieves the top end of that higher range, it will raise just over $717 million in new cash and achieve a valuation of $10 billion. Not bad for a business that was formed 7 years ago, which does not have a headquarters and whose 1,350 employees work remotely in more than 65 countries around the globe. GitLab's software and coding platform allows its customers to develop innovative and value-added code for their businesses and to do so collaboratively from just about anywhere. GitLab's approach means its end users can greatly speed up their software development timetables, sometimes condensing them from weeks into minutes. GitLab's revenues over the last 12 months reached $196.36 million, and the customer base includes blue-chip names such as Siemens, NVIDIA, Thomson Reuters, and Ticketmaster. The IPO is being coordinated by Goldman Sachs, who are also a GitLab customer, Bank of America, and JP Morgan, who between them are looking to place 702 million shares with investors. It would be very surprising if GitLab's IPO didn't go well, as it has all the right credentials for success. Another software business that's been getting attention is Avid Exchange Holdings Incorporated. The company provides accounting and invoicing software for middle market businesses. Avid Exchange, which will trade under the ticker AVDX, was able to price its IPO at $25 a share, the top of its indicated range of $23 to $25. The company also increased the size of the issue, raising it to 26.4 million shares from an initial proposal of 22 million. Avid Exchange is backed by high-profile names such as MasterCard and tech billionaire Peter Thiel, though both parties sold stock in the issue. The $25 price tag valued the business north of $5 billion. Goldman Sachs, JP Morgan, Bank of America, and Barclays managed the deal. However, Avid Exchange disappointed on debut, opening at $24.14 and thus below the IPO price. They briefly traded at $25, but it finished the day in the red at $24.94. Sizing and pricing IPOs correctly is something of a balancing act, but sometimes it's good to remember P.T. Barnum's famous quote, "Always leave them wanting more before you upsize a deal." London's IPO credentials suffered a blow last week when a stock that was listed in a blaze of publicity just over a year ago hit the buffers. The Hut Group, or THG as it is now known, specializes in online retail and distribution and has ambitions to diversify into e-commerce technology. It IPO'd in September 2020 with a valuation of just under $7 billion. Having sold 376 million shares at the equivalent of $6.81 a share, the stock traded up to $8.66 on debut. THG sold options on 20% of its technology division, which it ultimately hoped to IPO, to Japan's SoftBank, one of the world's largest technology investors. However, short sellers have recently targeted THG, questioning the value of the technology business and pointing to poor earnings, supply chain issues, and the fact that SoftBank has decided not to exercise their options over the tech business at the earliest opportunity. THG organized a capital markets day to reassure investors, but the presentations that the company made appeared to raise more questions than they answered. And in just 2 days trading, the stock price fell by 38% to stand at the equivalent of $3.70 a share. The company's market cap is now just $4.47 billion as a result. This is a perfect example of why companies need to clearly communicate their strategy, their performance, and their long-term goals to investors and the wider market both pre- and post-IPO to try to ensure long-term success for all parties. That's all we have time for today, but as usual, make sure you do your own due diligence before making any investment decisions.